Canada Technical Recession 2026. Is the Toronto GTA housing market crashing or correcting? Ciao. Welcome to a new episode of helping you build wealth through real estate brick by brick with me, Nico James-Bock, founder of the CondoWiz Group and a real estate broker here in Toronto GTA. Smash that subscribe button right now, because today we need to talk about the headlines screaming that Canada has officially entered a technical recession for the first time since 2020. But here is the real question. Is this a housing collapse, or is it a massive smokescreen hiding one of the unique strategic buying windows we've seen in years? Today, we are breaking down the Q1 2026 GDP drop, the fresh TRREB stats, the shadow of US tariffs, and how the crisis in the Middle East is changing the Bank of Canada's entire playbook. Let's look past the noise and get to the truth. The technical recession decoded. All right, let's look at the raw data. Statistics Canada dropped a bomb earlier in the week. The Canadian economy contracted by 0.1% at an annualized rate in Q1 2026, the first 4 months. This follows a revised 1% drop in Q4 2025. By definition, 2 negative quarters means a technical recession. The last time we saw this was the pandemic in 2020, and before that, the 2015 oil crash. But don't panic. A 0.1% dip is razor thin. This is economic stagnation, not an absolute collapse. Interestingly, on a per capita basis, real GDP actually managed to edge up 0.2% because our population dipped for a second consecutive quarter. So what is actually dragging us down? It isn't everyday consumer spending. It's a massive freeze in business investment. The tariff squeeze and the AI divide. Here is the real villain behind the numbers. US tariffs are actively squeezing Canadian exporters. In fact, our exports fell 0.5%, heavily driven by a massive hit to passenger cars and light trucks moving across the border. Now compare us to the States. In the US, business spending is absolutely booming, driven entirely by artificial intelligence and data center infrastructure. In Canada, business capital investment plummeted for a 5th consecutive quarter, down 3%. While American tech is flying high, Canadian corporate cash flow is sitting on the sidelines, trying to play defense against trade uncertainties and CUSMA, renegotiation fears, geopolitics, and the inflation trap. Now, let's throw global geopolitics into the mix. The war in Iran and the subsequent closure of the Strait of Hormuz have triggered a massive spike in global oil prices. Normally, as an oil exporting nation, higher crude and natural gas shipments would bail our economy out, and they did offset some losses this quarter. But spiked oil prices means sticky energy inflation. Even though our internal domestic demand fell 0.4% and April inflation data came in softer than expected, the Bank of Canada is trapped. Governor Tiff Macklem has to balance a soft domestic job market against imported global inflation. The bottom line, the Bank of Canada is almost certainly going to hold the overnight rate steady at 2.24% at the June 10th meeting for the 4th consecutive time. So, how is this macro chaos impacting Toronto GTA real estate? Let's check the fresh TRREB data. Total residential transactions are actually up 7% year over year, proving that there is active pent-up demand. But the big story is prices. The GTA average selling price sits at $1,051,969,000, which is down 4.9%, just under 5% compared to last spring. Seasonally adjusted, prices actually ticked up 0.8% month over month, showing a spring floor is forming. New listings dropped 9.3% year over year, meaning we aren't seeing a desperate flood of panic selling. The market is tight, but it heavily favors buyers who understand that today's prices are a full 21% off the March 2022 peak. Let's slice these numbers by asset class, because the micro markets tell the real story. In Q1, residential investment fell 2%, heavily impacted by a massive 9.9% drop in resale housing activity. Condo townhomes took the hardest hit, with average prices down 10.1% year over year to $704,847. Condo apartments also slipped 6.3% annually, averaging around $635,653. If you are a buyer looking for leverage, the condo sector is your playground right now. You have immense negotiating power and zero bidding wars. On the flip side, semi-detached homes are holding firm, down just 5.1% annually to a healthy 1.3 million, with a strong 27% surge in monthly transaction volume. Freehold demand is alive. Condo supply is building. The household savings trap. While corporate profits rose 1.6% this quarter, keeping the stock markets looking artificially happy, everyday Canadians are feeling the pinch. Household spending technically rose 1.5% annualized, but StatCan noted it was driven by higher costs for financial services, not fun stuff. Canadians actively pulled back on travel and vehicle purchases. Even wilder, the household saving rate dropped to just 3.5%, its lowest level since early 2024. People are spending faster than they earn just to stand still. This means a gap of nearly $600 a month exists between what a typical renter can comfortably afford and the actual cost of a mortgage today. That gap is keeping people renting longer, putting massive pressure on the rental inventory. Here is the CondoWiz playbook for May 2026 and June, right towards the end of the official spring market. Do not wait for interest rates to crash before you buy. If you wait for the Bank of Canada to slash rates, everybody else on the sidelines will run back into the market. And that $1,051,969 average GTA price will vanish. Right now, you have a technical recession giving you massive psychological leverage over sellers in most pockets. Conditions are back, pricing is more negotiable, and competition is fairly low. Buy the asset class under pressure, like condominiums. Lock in your price and ride the recovery when trade uncertainties return. If you want a tailored wealth plan, reach out to me. And don't forget to comment, like, and share this episode with someone you know. Thank you for your time and attention. Let's build your wealth brick by brick. And I'll see you soon. Ciao.